Well, on the basis of certain metrics, it's very overpriced.
It's funny because Apple reported its numbers last week, and apparently they beat their numbers. What people fail to notice is that the analysts reduced their expectations, and Apple is selling now less than what it was doing a year ago. The sales went down. They are not growing.
Yes, right.
And the stock is trading at a PE of almost 30. To be trading at a PE of 30, it should be a growth stock, and there's no growth, but everyone is loving it. You said the other day that when we have zero interest rates, imagination displaces analysis. and I found that phrase brilliant, by the way. But do you think this mentality is still on in the stock markets today? I mean, you said that maybe the stock market is overpriced, but how overpriced is it?
Well, on the basis of certain metrics, it's very overpriced. It's the contenders for the title of all-time richest would be 1929 and or the year 2000, I guess.
Wow.
So I've heard people make this bull argument for Apple that it is, the growth is slowed down, but it's now going to be a consumer staple. Staple because people can't live without their cell phones. They would sooner give up their second car, maybe their first car, than their cell phone. Walk out of the office without your cell phone, you feel as if you're missing an item of clothing. It's embarrassing. You have to retrieve it. It's a compulsion. So anyways, it's except cigarette companies have an even greater compulsion, and they have been through their cycles. Hats off to Warren Buffett, hats off to all the Apple bulls, but I think this is not so much a stock selection as it is a moment in a cycle. And we at Grants are looking at some of the legacy media companies of yesteryear, and now they've I don't want to go into names just now, but they pick one or two just for broad description. They have trended from composite newspaper and TV and broadcast TV companies to the deepest cigar buddy kind of value stocks. And if you were to make the case, if you made the case that Apple at 30 times earnings is going to remain at 30 times earnings regardless of its growth rate, you'd have to explain why it should be any different than the most beloved growth stocks in the past many of them have gone on to their cyclical rewards at much lower multiples. So nothing is in a dynamic system such as market capitalism. There's no such thing as permanent high plateaus. There's no such thing as permanent franchises. And I would see Apple in that light.